Hey everyone, it's Bill McCafferty here. Today is Friday, June 5th, 2020. Hope your day's going well. Hope you had a great week, and I hope you're getting ready for the weekend. So today I just wanted to come on and give you episode number 19, a day in the life of an asset manager / note investor. Very excited here, episode 19. Next episode will be number 20. So when you start getting up to those numbers, you kind of know you got some good momentum going. Things are moving forward well for you. And like I normally do, I just want to supply you guys with, real deal content, real deal information. And, really wanted you to get a real good look into, what I deal with on a weekly basis and, what note investors deal with and everything that we're kind of handling throughout the week. Like I normally ask you guys, I'm looking forward to feedback from everybody, both good and bad feedback. What you like about the videos, what you don't like, maybe some things that I should do or some things that I shouldn't do. If you're uncomfortable commenting below the link, just send me a private message. I'll definitely look into it, and I would really appreciate any feedback. Like I said, both good and bad. It's all good with me, just trying to improve things and give you what you're looking for. So like I do every episode, I'm going to start off with my asset management portfolio, which is PMR2. PMR2 is made up of other investors' loans. They hire me to manage. It's majority non-performing second mortgages, but I do manage some non-performing first mortgages. So right now, PMR2 is managing 109 non-performing note files. PMR2 brought in 3 new files this week from an existing client, actually my biggest client. So that's exciting. It's been a while, a couple files here and there, but 3 in a week. It's been a little while for that, so that's exciting. Of the 3 new files, I was able to get in touch with 2 of those borrowers. And since I was able to get in touch with those 2 borrowers, I sent those borrowers my loss mitigation form, my loss mitigation process. We also received 2 loss mitigation packages back from borrowers. So that's exciting. I was able to get those processed, and I sent those 2 borrowers my option forms, right? My option form talks about payment plans and a discounted payoff offer. So sent that out, hoping to hear back from those borrowers next week, and we can start getting those non-performing loans resolved for those 2 borrowers. No new loan mods or payoffs either sent out or processed. So not great. I do have one due back, actually today. So I'm hoping when I go to my P.O. box, today or tomorrow, or maybe even Monday, that loan mod, is in there. No new foreclosure sales, no new bankruptcy filings, and no files wiped. So, if you're keeping track, you can kind of see that activity starting to pick up. I'm excited because I feel like this week was the first week in the last few months where things are picking back up, and I'm plugged right into my my clients' portfolios, and we're moving forward here, right? The quarantine ban is being lifted. People are trying to get back to work and do some things. Once again, there's a lot of crazy stuff going on out there. I'm just trying to stay focused. Right? Because it's what I talk about, right? If you want change, look in a mirror. It all starts and it all ends with you. I'm real famous for I'm staying in my lane and I'm minding my business. I don't do that because I don't support other people's beliefs and what people are doing. I'm just better off doing that for my family and taking care of my business. So that's what's going on with PMR2. Let's jump over to my portfolio, PDRS. So, as usual, when PDRS moves into a new month, I'm processing my bank statements, processing my servicing statements, Keeping track of my reperforming loans that the borrowers are paying on, and just getting all my stuff situated so, my accountant and my QuickBooks assistant can process and handle all my QuickBooks data entry and reconcile of my books. One thing that I am looking into and that I'm moving forward with is, if you remember a few weeks ago, I talked about PMR2 getting a loan for the Paycheck Protection Program. And if everything goes right with that and I use it for all the right stuff, that loan can be forgiven. So my other company, PDRS, we applied for the SBA Economic Disaster Loan. So I was able to get a grant. And then last week, I got an email from them saying that I was approved for a loan. So, reading all the fine print, which I always suggest to everybody, no matter what you do in business, always read the contracts, always read the agreements, maybe even have other people review them for you so you're all seeing the same thing and it makes sense to move forward. So they offered me a loan. This cannot be forgiven. This will have to be paid back. I read the agreement, sent it over to my accountant, talked to some other people about it. And after a final good conversation with my accountant, I am going to move forward with accessing the SBA Economic Disaster Loan. My feedback with everybody out there in business, don't be scared to pursue loans. Don't be scared to pursue investors. Real estate is all about OPM, other people's money. The better off you're doing, the more OPM you're going to need. So that's what PDRS is doing, moving forward with getting an SBA Economic Disaster Loan. Once again, I don't really like to talk numbers and specifics. I'd be more than happy to talk to people, off live videos. So, if you want to PM me or you want to give me a call, feel free to do it. I can tell you what's going on with that and how I went about it. So like I do every week, I either give you guys some strategies or techniques or some case studies. So today I want to give you my Pittsburgh, PA case study. The deal from hell, the craziest deal. A lot of them are crazy, but this is a very crazy one. It took about 4.5 years to resolve. Everything that could go, not really wrong, but everything that you have to deal with on a non-performing note file actually happened on this file. Now, a lot of deals I may have to deal with, one or two of these, but on this particular file, we kind of dealt with a lot. So we purchased this non-performing second mortgage back in August of 2015. The loan balance was $18,000. Last payment on this loan was February of 2019. The last payment was 6 years prior to when we purchased this. So the loan balance was $18K, but the payoff was higher, right? Because there's 6 years of owed interest. There's 6 years of late fees. So the numbers on this particular deal, the fair market value of the property, what the property is worth, or what the property was worth at the time of purchase, was $300,000. There was a current first mortgage of $150,000. So, a lot of equity covering our second mortgage. When you buy non-performing loans, and there's a lot of equity covering your loan, you're going to pay more for that than if there's no equity. So we started the foreclosure, the legal process on this loan in October of 2015. So as we were moving forward with the foreclosure, we filed our complaint, which is, the first main step after a demand letter in the foreclosure process in a judicial state. When we filed our complaint, the borrower reached out and let me know, hey, I want to resolve this, but I also want to let you know that I made a bunch of payments already on a previous loan modification to the lender that you bought this loan from. like I normally do with all my loans, I say I'd be more than happy to take that into consideration and to work with you. I just need proof. Can you supply some bank statements or some checks showing that the checks were cashed? I just need some proof to take back to my decision makers to be able to, help you out with that. Also, here's our loss mitigation form and process that I need completed to be able to help you out. So a little while late, a few weeks, maybe a couple months later, he got an attorney involved. So that attorney basically answered our complaint and basically contested the foreclosure. So what goes on with that? Some foreclosures are uncontested, meaning borrowers accept the fact that they owe the money. Nobody pushes back. Nobody files files anything back to us. And everything's smooth. We eventually get it resolved. The borrower's attorney's not pushing back. And it's not contested. I say about 1 out of 3 non-performing second mortgage files that are in foreclosure get contested either by the borrower's attorney or by the borrower. And when they get contested, they're basically pushing back on us and filing documents and asking the courts that we have to prove stuff to them. So they answered our complaint, basically saying they owe the money, but they also made a bunch of previous payments and they want credit for that. So they were never really able to prove that. And then even a few months after that, while we were preparing our judgment, the borrower's attorney filed a complaint on us. They filed a complaint on us stating that, we were doing some things wrong. Under the Fair Debt Collections Practice Act, that act gives homeowners and borrowers the right to be able to file a complaint on a lender if a lender is harassing them, if a lender is, trying to commit fraud. Basically if a lender is not doing what they're supposed to do, a borrower has a right to sue the lender. So it was definitely bogus. We were able to get through that and push off their complaint and get through that. But, here we are, both sides, the borrower and us, we're spending more money in legal fees, and legal fees are racking up. Time's going by, things are being delayed. So, over the course of 3 years between it being contested, them filing a complaint on us, our attorney kind of not being the best, things were not going as smooth as we would like. Sometimes we think it's the attorney, but it's also the courts, or it's also the opposing attorney pushing back. Sometimes the documents need to be corrected. Sometimes we need to get a payment history. So we actually had to redo our judgment a few times by the request of the judge because he wanted a better judgment package. And it really had to do with the payment history. So, for the longest time in this business, you could get away with just saying, hey, this is what the borrower owes. Here's the last payment that they made, and this is the next payment due. The payment history that we have is they haven't made any payments. So over the last 2 years, maybe about 3 years, a lot of the judges and courts are looking more for a payment history from the original lender, the lender that originated the loan. So if a homeowner made payments for 5 years, that's the payment history that the judges and the courts are wanting to see. They understand that the accounting is the accounting and that we haven't received any payments, but they want that original payment history from the lender. So we eventually got the judgment granted from the courts, from the judge. And as we were moving forward, the next step would be requesting a foreclosure sale, a sheriff's sale from the courts. So while we were preparing our sale package, the borrower reached back out and asked for a payoff. We sent them a payoff, and a few weeks later, we actually got a full payoff on this loan. So this was just about 2 months ago. So as you can see, this was about a 4.5-year deal. This deal tested everything. It tested our patience. It tested if we were doing everything correctly. It tested our attorney. It tested everything. So we hung in there. We were patient. We went about it right. We did everything that the courts and the attorneys asked of us. This particular deal ran up the highest legal bill that I've ever dealt with on a foreclosure, contested or uncontested. You can get into litigation, and I've seen litigation expenses run up, costs run up higher, but a particular uncontested foreclosure, this was the most expensive. So this was the best possible outcome. It worked out in our favor, the best it could possibly do, because when you get a full payoff, we got everything owed by the borrower, right? So, it was a 4.5-year deal. So it collected more interest, collected more late fees that the borrower owed, and the borrower paid all our legal fees, all our recoverable legal fees for a payoff. So, the borrower tried to fight us off, push back. I don't know if they really put themselves in a better position because, like I said, owed interest ran up, late fees ran up, legal fees ran up. But the outcome was great for us. We got a full payoff, and everything worked out good for that. So, that's a crazy deal. You can definitely see everything that we dealt with. A lot of times the borrowers do contest, or they answer our complaint, or they answer our judgment, and we got to respond. Sometimes you deal with an attorney that is running up a legal bill, and there's nothing you can do except for get through the deal and then move on from the attorney. So that's my Pittsburgh, PA case study. I hope you enjoyed it. Gives you a good glimpse and a good look into what we deal with and what this business is. Finish off the day strong. Hope you had a great week. Enjoy your weekend. Do some stuff that you enjoy. Spend some time with the family. Get rejuvenated because Monday will be here in a few days. I appreciate everyone. And like I said, give me feedback, good and bad. Thanks.